Welcome everyone to Key Drivers to a Successful Deal, a webinar co-sponsored by Logisyn Advisors and Ansarada. My name is Jan Raymond. I am a managing partner of Logisyn Advisors. We're very fortunate today to have with us Alex Rafla of Clarendon Capital and Anthony Paris of Paris Brothers. We're particularly fortunate because in this case, besides Anthony representing the seller's perspective and Alex representing the buyer's perspective, we're able to talk about a specific deal where Anthony's company was the seller and Alex's company was the buyer. So we can not just talk in generalities, but we can even talk about specifics to hopefully give some more insight into what one can expect in doing an M&A transaction in the logistics industry. My personal background is I have been an industry veteran in operations as well as in legal for many decades, in the course of which I represented either the seller or the buyer or as an advisor on over 100 logistics M&A transactions. With that, I'd like to introduce Anthony Paris of Paris Brothers, tell you a little bit about his background, and then we'll follow with Alex talking about his background. And lastly, we'll turn to Will Lurie, who is representing Ansarada, our co-sponsor today. So Anthony, take it away.
Thank you, Jan, and I want to welcome and thank everyone for joining us on this webinar and discussion. My name is Anthony Paris. I am an attorney for the Paris Brothers Group. I've been practicing law since 2000. I've done lots of different things, but the focus, or at least the last, 18, 19 years has been with the family company. So I've been a COO, I've been a CEO, I've been a CLO. So I've kind of had a bunch of different hats. Our business is in the warehousing and food distribution. We did have a company that we came to a transaction with Alex and his group that was in the freight forwarding specific business. So I've kind of been in the 3PL and transportation sector for some time. We also do roasting coffee. So Parisi Coffee, I know it's my shameless plug, but Parisi Coffee and Mother Earth Coffee. We roast a lot of coffee out of Kansas City, Missouri, and we do run cafes in Kansas City. And then we have some kiosks that are kind of rolling out, hopefully nationwide here soon. So as part of this transaction, I was a legal advisor for the family, intimately involved with the transaction and the company for several years. So I know we got more to talk about here later, and I'll let Alex introduce himself.
Thank you, Anthony. Alex, you're up.
Thank you, Anthony. Thank you, Jan. My name is Alex Rafla. I'm a vice president at Clarendon Capital. We're a private equity firm in the Washington, D.C. area. Our fund exclusively focuses on investment opportunities in middle market, transportation, logistics, and distribution companies, and only companies in those segments. To date, we have made 11 investments in the transportation logistics industry and 3 platforms out of our current fund. I have personally spent my entire career in transportation logistics, first in consulting, focused on strategy consulting, and then currently in my career for a little over 6 years now on the private equity investment side. I have touched practically every sector of transportation logistics, including courier, last mile, parcel, air cargo, freight forwarding, intermodal, rail, trucking, warehousing, and transportation infrastructure. As it relates to this transaction, this was a transaction we conducted on behalf of one of our platform companies, All States World Cargo, which I am a board member of. All States is a freight forwarder. We had a very successful transaction with Anthony and his group. Thank you.
Great. Thanks, Alex. And Will, what the heck are you doing on this call?
Great question. So my name is Will Lurie. I'm with Ansarada. So Ansarada is a technology platform that helps companies and advisors execute on their most important events that they'll ever go through. So in this case, we're talking about M&A, but also capital raising, restructuring, IPOs, the whole works. I've been with Ansarada for about 5 years. I am a senior customer success manager. Very fancy way of saying that I frankly just help people utilize our technology, learn it, and get value from it.
And on this call, Will's going to be handling the technical aspects, including the Q&A. So if you do have a question, and hopefully there will be some questions, there's a Q&A button, I believe, on the Zoom. You can submit your Q&A, and Will sort of herd that together and interrupt us as necessary, or have some Q&A at the end of the call. So having said that, let's start the process. So the M&A process basically has 3 phases. The first phase is pre-LOI, LOI being letter of intent. And the second phase is due diligence. And the last phase is the closing. And I analogize this to a wedding because really that's what's going on. A buyer and a seller are getting married. And so the pre-LOI stage is the dating stage. It's where you get to know each other, you talk to, you may go out with multiple people until finally you get to an LOI, letter of intent, which is the proposal. And when the seller accepts the proposal, you become engaged and you go into due diligence, which is where you start making your wedding plans, working through integration planning, all the legal documentation, et cetera. Verifying that the person that you're dating actually is the person that you thought you were dating, et cetera, and that deciding you actually do want to go through with the marriage, and then finally the closing is the marriage. So having said that, let's start with the first stage, the pre-LOI stage, and let me turn this stage over to Anthony and ask him, every M&A transaction starts with a seller deciding they want to sell their company, or in the case of Anthony, they want to sell one of their companies. So the question is, Anthony, how did you decide to sell? What went into the decision-making process in deciding to sell your company? What were you looking for? And because, as far as I know, there's no such thing as M&AeHarmony.com or M&AMatch.com, and you probably didn't list your company on eBay for sale. How did you go about finding suitors?
Jan, great question. Let me tell you, that was a difficult decision for our group on whether or not we would take Groundford Expeditors. That was the freight forwarding company that we sold with Allstate and Alex's crew. It was a very difficult decision in the sense of we knew we were at a crossroads where we needed to do something to either grow that business, bolt on something to that business, and really help our employees kind of have something, some sort of future to look forward to. So, organic growth was great. We had been running this company as a family for many years, and we had a great operator. So our general manager over there, which was the brains and the operation, he needed some help to really grow that business. And it was a difficult decision to make, to say that we were going to sell. So, you kick around whether or not you're going to buy something, bolt on something, or try harder at something. With freight forwarding, kind of a specific business, and Alex can talk to this as well, and Jan, you're in that business. There's only so many companies out there that know what they're doing with freight forwarding. You really have to know what you are doing. And so as we decided to, take that leap and see if it was even worth selling, because the decision comes down to who are we going to marry up with? And I know, Jan, you use that reference, and it's a great reference. We wanted to make sure the employees that worked for us will work for a great company going forward. So we turned to who we knew in the business, which was Chris Aarons with Logisyn, who introduced us to his team. And you go through that process of who is the best people or company to represent you and your company out there to find the right buyers. And we knew Chris was in the transportation, or at least 3PL business, for a long time. Really liked the Logisyn group and felt like they could marry us up with the right company. And we believe that's happened in this situation. I think I answered all your questions, Jan.
I think you did. I want to, at this point, say this. Logisyn has a lot of competitors, and they're all very good. So I think an important thing that you said was that fit, that you felt that Logisyn was a good fit for you. We may not be a good fit for everybody. So I just want to stress that to everybody. Make sure when you hire any advisors, CPAs, lawyers, whoever, that you, if you have that comfort, you have that fit to get the best possible result. I also want to point out here that before you talk to suitors, unlike in regular dating, before you talk to suitors, we have them sign non-disclosure agreements, confidentiality and non-disclosure agreements, because you're going to be revealing a lot of your confidential information as a seller to that other party. And you want to make sure that that's protected so that it's not used against you in a competitive manner. Confidentiality is extremely important in this process. I can't stress this enough. I can't tell you how many times I had people knock on my door and say, hey, I heard we were being sold. What's going on? And what does that mean for my job? Or a salesperson come knock on my door and say, I was out on a sales call and the client said they heard we were being sold and they're not sure they want to stay with us. So, you know, it's extremely important that this be conducted in a confidential manner. So that applies not just to the NDAs and that process, but again, in your selection of your outside advisors to make sure that they recognize and enforce that strict confidentiality. And as a seller, you want to give a lot of thought to who in your organization you're going to, as we say, bring under the tent. Let know that you're in this process, because if you let too many people in, the word's going to get out. But you probably are going to need some of your inside people under the tent in order to facilitate the process. So with that having said, Alex, I'll turn to you and ask you sort of the reverse question, which is, I asked Anthony, how did you find suitors? Alex, how do you find targets? And what do you do to define what you're looking for in a target?
Yeah, great question, Jan. Thank you. And as you know, what we look for specifically as we look at for bolt-ons for our existing platforms, which is kind of different considerations than we're looking for a brand new platform off which to build. Ultimately, the question we ask ourselves and the management team asks itself is, what's the strategic fit? You know, we're not in the business of just going out trying to buy revenue and EBITDA. We're looking for companies that we could add on that will you know, either expand our service offering, expand our geographic footprints, or add some other type of value to the company that's really strategic and aligns with our strategic growth plan that we set out to do. And typically in many of our investments, especially since they're in the transportation logistics industry, which is highly fragmented, we have both an organic and an inorganic or M&A driven growth strategy. You know, as part of that inorganic or M&A driven growth strategy, we seek complementary and synergistic add-on acquisitions that we could add on to our existing platform. So how do we go about doing that? That's several ways. One way in particular is that we receive teasers or opportunities come our way through investment banks like Logisyn, and we take a look at a lot of things that Logisyn has because they're focused in transportation logistics, as are we. So they tend to represent a lot of opportunities that we're really interested in. In other ways, outside of an investment banking process, whether that be through a buy-side advisor or through our internal network, you know, at Clarendon, or, you know, many of our executives at our portfolio companies have relationships with competitors or other providers in the industry that are perhaps looking to either fully exit or be part of a larger platform and continue operating in that business.
So let me ask you this, Alex. Anthony mentioned retaining an investment banker to represent him, the seller. Do you as the buyer ever retain investment bankers to represent you? And if so, why?
Typically, as the buyer, we don't retain investment bankers, but we do retain other advisors to represent us in an agreement, and that typically comes in, you know, post LOI. Although we definitely have our lawyers involved as we kind of draft our letter of intent. Mm-hmm. And you know, the reason being is, you know, All States Roll Cargo is owned by a private equity fund, and as a private equity fund, our core competency is identifying and executing on transactions. So Perhaps for another strategic who may not be as familiar with the buy side process, it could be valuable for them to hire an advisor to help them through that process. But for us, we help our portfolio companies through that process, given our experience doing multiple transactions throughout our history.
Now, and correct me if you disagree, Anthony, but as a seller, they're probably willing to receive LOIs the day that they go to market. They if you never ask them any questions, they don't, they're still willing to take a look at an LOI. But you, as the buyer, Alex, are not going to issue an LOI until you reach a certain comfort level that you want to proceed with this company. What are you doing in this dating process, this pre-LOI process? What steps are you taking? What information are you looking for to get the comfort level to be able to go to issue an LOI?
Sure. Ultimately, our goal in the pre-LOI process is to gather information that will lead us to answering two questions. Number one, is the company a strategic fit and fit for the business? So do we want to buy it or not? And number two, what's the valuation and structure? As it relates to number one, understanding their service offering, the type of customers they serve, their organizational structure, and how that kind of fits within the company. And a lot of times, as a private equity fund, although we're experienced in the industry, we need to rely on the management team to let us know, hey, this company does make sense. So it's a very collaborative approach between the private equity fund and the management team at our portfolio company to make that ultimate decision. With regards to number two, ultimately, many of the, we really only invest in companies that are profitable for the most part. And, most companies are valued on a multiple of EBITDA. So getting the financial statements, the historical financials, trying to understand what the revenue, gross profit margin, EBITDA of the business is currently during the last 12-month period, as well as historically, and any type of projections that the sellers may have, trying to understand the customer mix and the customer concentration in the business, which lets us better understand how diversified the business is among different customers and if there's any kind of concentration risk. And just really getting to know the management team a little bit better, getting comfort on who will be, in this case of Paris Brothers, they had a general manager that was going to continue on with business. In other cases, there could be a founder, owner, entrepreneur that's fully waiting to exit, ready to exit, and we need to be comfortable that there's kind of a second in line that is going to continue to operate, or if we have that kind of capability to fill in at our platform. So those are kind of the key considerations we have to get us to an LOI, because we ultimately, our goal is it a fit or not? Number two, at what valuation and structure? And that's what we need to present an LOI.
So Anthony, I was joking about, on day one, you'd be willing to accept the LOI. The reality is that this dating process is a two-way street, right? Because as I said, you want that comfort, that fit. You want, you have goals that you want to achieve in this process. So what steps are you taking in the pre-LOI process? What are you doing? What's your experience with that? How do you approach that to get to the point where when an LOI is presented, whether you might want to accept it or not?
Well, let me answer the first question, whether or not we would, somebody should or should not accept an LOI like day one. I think you really need to explore why you would be accepting that LOI on day one. If you've done your homework and you've met the people, okay, that might be a different story. But in our case, that probably wouldn't have happened if I got an LOI the first day of meeting someone and kind of courting them. I doubt that we would have accepted it. But what we did to prepare for what we were looking for and what a buyer would be looking for is really a credit to Logisyn and Jan and Tom and Chris. They really hounded us to make sure we got all the information we needed. I will say, lucky enough, we were ready for it. We already had kind of things organized in the way that we felt it needed to be as we were kind of thinking whether or not we would even sell the business. So we were lucky, and I joke that Jan was really on us, and Tom and everybody, they were kind of hounding us to get things right. But it was a lot of work. It was a team effort to make sure that what we had prepared would make sense for a buyer, and whether or not it's superfluous information or kind of just cutting to the chase and what buyers expect to see. You hire those advisors, whether it's Logisyn or another firm. They help you organize your data, and that was another thing that really helped us with organizing the data. Was Ansarada really had the structure I felt like was matched up the way I think things should have went. So their file structure made it real easy for even a novice to kind of navigate the waters and see where information should be held, and I'm sure for the buyers to go find that information in the proper file folders.
Okay. Alex, once you reach the point where you decide, okay, I want to make an offer, issue a letter of intent. I want to say something about letters of intent for a second. Letters of intent are legally not binding, and what it means is it does not legally obligate either party to complete the transaction or even to complete it under the terms that are set forth in the letter of intent. There are a couple of provisions in there that are legally binding. The biggest one is the exclusivity period. Once a buyer accepts an LOI from once a seller accepts an LOI from a buyer, they are making a commitment. They're getting engaged. They're making a commitment not to flirt with anybody else, not to cheat on their prospective spouse for a limited period of time until they decide if they're actually going to go through with the wedding or not. And it's typically between 60 and 120 days. And that is legally enforceable. But most of the LOI is informative as opposed to legally obligatory. So Alex, how do you decide what to put into your LOI?
Sure. And we do things perhaps a little bit differently. We like to, we have a pretty long form LOI, and part of that is talking about ourselves and our company and kind of explaining how we do business and some and our track record to kind of help the seller, in addition to the phone calls that we've had, understand that who we are and why we think we're a fit or the best kind of fit for their business, right? This is one of the most important decisions any seller is going to have, especially as they built this business. It's their baby, and they need to get comfortable that the buyer they select is the right buyer. So we try to, in addition to what we've already communicated, we really try to outline that, upfront in the LOI, and who we are, the type of organization that they're joining, and so forth. And then, as Jen mentioned, the two main components that we typically include in an LOI are what is the enterprise value or the valuation of the business, and the structure. And the structure has several components. How much of it is going to be cash at closing? How much is it going to be in an earnout, if there is an earnout component, which is kind of a contingent, based on certain performance, and how that earnout is defined. There could be a roll forward component, right? Not in this case, but in other cases, there could be an entrepreneur who wants to, only sell a short, a majority, but still retain some equity in the acquiring business, kind of more of a recapitalization, and get kind of equity in that business. So there could be a portion of the total enterprise value that is rolled forward in common equity or any other type of equity. And then in some cases, we may, if there's an owner and there's, they're leaving the business, we may outline some sort of, transitionary consulting service, or, with the expectation that somebody that, will be with the organization for some time. Again, not in this specific case, but in other LOIs that we've included that. So really giving background on us, discussing the purchase price and structure, and any other kind of key deal points at a high level. Like Jan said, this is not binding, and it's really subject to confirmatory diligence, and things and environments change. But we've typically, we take the LOI very seriously at the same time, and really do not like to deviate from the terms that we've set out in the LOI, because that's what we're basing our investment decision on and the resources we're going to commit to the process.
So Anthony, how do you decide whether to accept an LOI that's presented to you?
Well, I'll tell you, that's not an easy question. I mean, you have to take a look at, who's presenting the LOI, whether or not, and at least in our case, does our team gel with the team that we're expecting the marriage to be with? I think that's an important step for any seller, even if you're exiting the business, because really, there's no corporations, there's employees and people. They're running this corporation. So in this case, it was a LLC, but they really have to mesh with the new management one way or the other, because things could fall apart fairly easily. But you're also going to look at, whether or not it makes economic sense for your seller. So in our case, it did make sense. It was, a mutually acceptable agreement that we felt we can go forward with, we would feel comfortable. And we actually have to see a lot of the employees in our community a lot. So even the general manager, we'll see them around. So I want to be able to walk around, my family, they want to be able to walk around with their heads held high, like we've done something good for that crew, and they're going to be able to, we really think it can explode. We think that the All States group can really help that particular business unit explode. So there's a lot of factors. I don't think there's, kind of a checklist of things that you can really go down, but I think it's personal to most sellers. And for us, it was about, making sure it was the right fit. That was really number one. So as we looked through, the LOIs that we had, it was a matter of who was really the best fit and did it make economic sense? Those are really the two questions for us.
So sometimes there are multiple LOIs submitted. And so I think that to the comments that what you said, Anthony, it's not always about the dollars. It's often also about compatibility, shared values, trust, respect, future of the employees, et cetera. So I think it is important that the sellers identify at the front end of the process what their goals are, what they're looking for, what they're trying to achieve, because it's not just about the dollars. Dollars are important, but it's not. I'm working on a deal right now where the highest bidder did not get the deal, and the reason was fit. The second highest bidder had a better cultural fit. Will, I thought I saw was there a question out there?
I think someone raised their hand, but they might have left.
Okay.
A gentleman named Rohit. If you're still in there, you can chat us. Otherwise, we can move on.
Okay. So the other thing I'd say about the LOI is because it's not legally binding, you might ask yourself, why do we even bother? We can just say to, the buyer can just say to the seller, this is what I'm going to offer you. And the seller can say, okay, fine. In my experience, the single most important reason to do an LOI is because when you have conversations, sometimes you say A and the other person hears B. And then you'll get down the process and you can get 3/4 of the way down the process before you realize that miscommunication and it starts to blow up the deal. So I think the most important thing an LOI does is it puts in writing exactly what you're saying so that when you say A, the other person hears A. And so that miscommunication is avoided. So having said that, let's move on to the second stage, the engagement, which is due diligence. The single biggest tool that is used in an acquisition transaction for due diligence is a data room. It's a place to collect, a platform to collect all the documents that are pertinent to the transaction that a buyer might want to see in order to vet the information that's been provided. So I'd put it this way. In the dating stage, in the pre-LOI stage, you're talking, you're making representations, verbal representations, you're providing some documents. In the due diligence stage, the buyer has a chance to drill down and in essence audit what you've told them, what they have made their offer based upon. Audit that to vet that that's actually accurate. and find any issues that might exist. And then in addition to that, not everything in due diligence obviously can be done with documents. So you need to be able to continue to have conversations, sometimes field visits, etc. We use Ansarada for our virtual data room. In the old days, you used to have a conference room with documents stacked up this high, and hordes of buyers representatives would come into the office and go into the conference room and lock themselves away looking at documents, and eventually sometimes call people in and ask for more documents. And the employees would look and go, who are these people? What are they? What's going on here? And remember the confidentiality aspect. So you come up with a cover story. Well, that's the auditors, and they're just here to audit. And the employees go, but wait a minute, the auditors were here 2 months ago. The good news is technology has now afforded us the ability to eliminate the conference room. The conference room now exists in the cloud. And so in deciding what data room to use, I will use this analogy again. I'm an old guy. You can tell from the stories that I tell. I've been around a while. And I don't like technology because I'm an old guy. My daughter loves technology. It's like a chip was born in her brain, right? But it's not for me. So what I found is that the more powerful technology becomes, the less user-friendly it becomes. And I bought a digital camera. I'm working with cameras since I was 5 years old. I bought a digital camera, and the manual was 431 pages long. By the time I could take a photograph, I'd be dead. It's just, but it can do everything. I just have no idea how to make it do everything. So in looking for a virtual data room, I wanted to find something that had the technological power, but I could actually understand it. Because I figured if I could understand it, anybody I dealt with could understand it. And we chose Ansarada, and this is really not meant as a plug. I'm just explaining the process I went through, because you will have to choose a data room. This is the process you should go through in determining what data room you want to use. Does it organize information and data the way I think and the way I think a buyer will think? Does it make it easy for me to press buttons or use my mouse and move things around to move things where I need them to go? Does it provide all that in a manner that's easy for me to use? Ansarada absolutely did. It also has an extremely powerful Q&A functionality. As I said, there's a lot of information you won't be able to get from documents. You have to ask questions. You have to ask follow-up questions. The Q&A functionality allows us to gather all the questions in one place, analyze them, and then distribute them to the people necessary to answer the question. Because instead of just dumping it all on Anthony, this way we can go to anybody else who's in the tent. And so it alleviates or mitigates the burden on the seller in providing the information, because the single most important thing a seller can do in this process is keep running your business, keep making money. Because if the deal falls through, you need your business. If the deal doesn't fall through, your earnout is going to be contingent upon how well the business does. So we want to get as much of that off of the shoulders of the seller as possible. The Q&A process in Ansarada allows us to mitigate the burden on the sellers and to organize all the Q&A in one place, so that if somebody else, let's say a lawyer had asked a question, now the CPA is asking the same question, we've got it there. We can just shoot the answer off. We never have to bother the seller. It's all organized very neatly. It's very compact. It also provides us with extremely powerful reporting functionality. And the reason that's important is because that allows us to see who's in the data room, how often, which documents they're looking at. And it gives us a roadmap to understand what's important to the buyer based upon who's in there and what they're looking at, so that we can queue up our seller to be prepared to answer questions on that topic, which again facilitates moving the process forward. And the last item is security. I keep talking about confidentiality. Ansarada has extremely powerful security functionality. And I'll just give you one example. If I allow somebody to access the data room and they download a document, and then at some point they're no longer in the process, and I want to remove their access to the data room, they still have that document on their computer, but they will not be able to access it. It's like the first 30 seconds of Mission Impossible. Mr. Phelps, this tape will destroy whatever. It has a built-in Trojan horse. We can set it up that way so that once we deny access, they don't have anything that they had gotten before. Great security functionality. So that's why we chose Ansarada. That's the thought process I went through. That's the thought process everybody should go through who's choosing a virtual data room, whether it's Ansarada or another virtual data room. Just like we, Logisyn, have good competitors, Ansarada has good competitors. So you need to go through that process and make that decision. So having said that, let me ask Anthony first. How did you know what to put in the data room?
Well, I think I alluded to this a little bit, Jan, but first of all, the data room had the structure that I expected to see, kind of organized in a way that I would organize information for a buyer. But really it was, Jan and Tom with Logisyn, you guys really kind of helped navigate, my team through what was needed inside of that file structure. But it was nice that there was structure that tells you where things are expected to be within the Ansarada program. And it was really nice that you can bulk upload these items. Really, I guess the bottleneck would be your own internet speed. But literally instant, you would get information uploaded. So, if we had 10 or 20 documents, they would be uploaded, and then we could have that discussion with Jan and Tom or whoever we needed to at Logisyn. After it was uploaded, I think you guys must have gotten, some sort of notification on your end. I don't know for sure, but sure was funny. So something would get uploaded and all of a sudden I'd get a call. Hey, can we talk about this? And of course, it made it easy for us to, kind of go through that data, sort of I'm very much old school as well. I love the computer stuff. I understand it all, but I certainly like the books and I like the paper. So I like to flip through my paper and kind of work through information, but it made it nice that you can open that up on the Ansarada system and kind of go through it. So the organizational function was really, you guys helped us out with that to make sure that things were organized in a function. And I don't know if that was, just the Ansarada group that did that on the file structure, or Jan and team kind of making sure that that looked the way we needed it to look. It's certainly how I would expect it.
Great. So Alex, what do you expect from a data room, and how do you use the data room in your process?
Sure. So one, we expect it to be user friendly and be able to download and view documents or other types of files with ease. Typically our process is our advisors as well as ourselves would send diligence request lists over to directly to the seller or to the investment banker. And they would, if the data is not already in there, they would upload any of those, the information, whether it be the accounting information, tax-related information, legal, insurance benefits, anything of the like, to the data room. So typically those diligence request lists, the sellers would kind of identify which folders they've responded in, which is matching up kind of what those requests are with the data, with the folder structure in the data room. What I found was very valuable in the Ansarada data room or virtual data room was the Q&A function that Jan mentioned, because there's always going to be follow-up questions. And you could actually ask the question specific to a specific file in the data room, and it kind of ties those two things together. And across multiple advisors, and have follow-up questions to those questions, and it stays in the same thread. But what I found was most powerful for me was typically, if a data room doesn't have this function, you'd have to have these kind of one-off calls or send a follow-up question list, and these files could sit, and maybe they're not the most up-to-date. They could sit on multiple computers. This was an all in one place. I could see all of, if I needed to refer back to follow up on something, I could go back and see all the Q&A and just get clarification on something versus having to dig through multiple, the accounting list questions, follow-up questions, and maybe there's multiple versions of that, the legal follow-up list questions and so forth. So it was nice to have that functionality in the Ansarada data room.
Speaking of Q&A, we do have a question from the audience. This might be more for Alex, but certainly, Jan, you can jump in as well. The question is there a difference in what's included in LOI for wanting to invest in a company versus acquire the entire company? So invest versus acquire as it relates to what's included in the LOI.
You want to take a swing at that, Alex?
Yeah, sure. There's really not much of a difference. It's just, you need to just outline the terms. So instead of the total purchase price, you are still going to be basing your purchase or what you're going to provide in terms of capital for investment based on some ultimate enterprise value. So you want to outline what the total valuation of the company is. You want to outline how much you're going to invest in exchange for what % ownership. As well as any other kind of specific deal points, maybe if you're making an investment of a certain amount, but you're going to stage that investment over time based on certain performance targets or certain milestones. You want to make sure you kind of clearly outline those at a high level, in an LOI. So that would probably be not much of a difference. It's just really clearly articulating kind of the valuation structure and how much you're investing and what that translates to in terms of ownership.
Great. So Alex, let me ask you, we talked about in the due diligence process, using the virtual data room, using the Q&A process. What else do you do in the due diligence process besides data room and question and answer? For example, site visits, management meetings. What else do you do to get to the point where you have the comfort level to say, okay, we're gonna close this deal?
Yeah, we kind of look at the 90-day exclusivity period to split up between kind of due diligence and then negotiating the purchase agreement and any other agreements that actually make the transaction occur from a legal perspective. So as it relates to the due diligence process, we have a process and a certain list that we go through in terms of the types of due diligence we do. One is the accounting due diligence or a quality of earnings report to really verify what was being represented in the financials. That's typically done by a third-party accounting firm. Tax due diligence, to understand kind of any type of tax liability in the business and the tax structure. Legal due diligence, understanding kind of the contracts, any type of relationships with customers and vendors from a contractual perspective, any type of legal liabilities or pending litigation, or any other type of legal issues that may be presented in the company. Insurance and benefits, so understanding that if the company has all the proper insurance, what it would look like as part of the platform. Are we going to have to make any changes to our insurance as we bring them on, from their insurance? Similarly, and that's kind of commercial or business insurance related insurance, as well as health and benefits type of insurance. And that's obviously a very important issue. You want to make sure that the employees aren't losing any type of, of benefits in that type of transition. And then environmental, doing kind of some desktop research on the environmental, as well as some background checks on the key personnel. So that's kind of and we also do internally some customer and business diligence just to understand customer trends, profitability, the tenure of those relationships, who controls those relationships, as well as some diligence on the organization. And that's where kind of the field visits and the site visits and the management meetings come in, where our executive team would come on site, meet with personnel that are in the tent, as Jan mentioned, and just really understand how the business operates on a day-to-day basis. And then going into, once we kind of get through most of that diligence, really that accounting, tax, making sure there's no litigation exposure, that's when we really start on the purchase agreement negotiations.
Alex, let me interrupt you right there before we get into the purchase agreement. I think a question came in, I think ties into what you've just been talking about. Will?
Yeah, that first, how much weight do buyers typically give due diligence reports, legal, commercial, financial, tax, et cetera, if provided?
I assume it means that the seller goes ahead and creates those reports and provides them to the buyer, versus if the buyer was going to conduct its own diligence with its own third-party advisors. So, from our perspective, and I would say this is typical of most buyers, we really want to have due diligence reports that are prepared by our advisors, which we pay our advisors for, and make sure that there's no kind of conflict of interest in any type of representation. So not to say that I would say those due diligence reports would be helpful, but I would say 99.9% of the time, the buyer is still going to bring in their own due diligence team. But it may make the process more efficient if the seller has already gone through that exercise. For example, producing its own quality of earnings report. But if a seller already has kind of audited financials, in some ways, that kind of substitute for a seller provided QV. So I hope I answered that question.
I think you did. Will, there's another question.
Yeah, this relates to vendor due diligence. So how important is vendor due diligence? We've covered that a little bit, but specifically, what are the benefits versus costs of preparing VDD? When/which case should vendor due diligence be prepared?
I think, is that vendor due diligence or virtual data room?
I'm assuming, actually, I can, Kwong Tran, if you want to ask your question live, I can allow you to speak. Go ahead.
You're muted, Kwong.
You hear me?
Yes, go ahead. Yes, go ahead.
Hi, thanks for allowing me to ask this question. So basically, I just want to, because I've been involved in some due diligence process, and along the way, actually, I'm more in the buy side, doing the due diligence, financial due diligence for potential buyer, and sometimes I do receive vendor due diligence, which is prepared by the seller. So I just wondering, how do you value the benefits of having the vendor due diligence? For example, like financial, tax, and technical due diligence. So like, because you just mentioned that the buyers they will, like, most of the time do their own due diligence. So I just want to ask like the benefits versus the cost of having the VDD.
I think
Thank
that
you.
actually cues up. I think that actually cues up a broader question, which again is for Alex. I'm sorry you're not getting to talk that much, Anthony. At some point, due diligence gets really expensive, right? With your CPAs and your lawyers and your all the other advisors and QV reports, et cetera. How do you figure out the cost benefit analysis, figuring out where to draw the line on that?
That's a great question. I think we ultimately look at it as just kind of a necessary thing that we need to do. As a private equity fund, we have lots of investors. Investors include individuals, but they also include pension funds. And, we have a duty to make sure that that capital that we're putting to work, in making investments, that we're verifying, trust but verify. And and using third-party vendors not only is the most efficient way, but it's the, you know, it's the way to make sure all incentives are aligned and that we are, you know, staying true to that duty, right? You know, as a private equity fund, we want to get a deal done, but we don't, by no means should we cloud the desire to get a deal done with doing the proper due diligence, and vendor due diligence is the way to achieve that. Additionally, you know, we're investment professionals. We execute deals. Our core competency is not doing a QOB or doing legal due diligence. We review those reports, we ask the right questions, but we really rely on our advisors to help guide us and uncover any issues that may present themselves. As it relates to the cost benefit, you know, in some cases, if it's a very, very small deal relative to what we're doing, with the, you know, the due diligence process might be a little lighter. Maybe the transaction structure, you know, lowers the risk of the deal. So, you know, we may just do some more kind of, you know, quality of earnings or making sure that, you know, a cash flow type of analysis and some legal work versus doing kind of the full-fledged work, especially if we understand the business pretty well. And I'm talking about deals that are, you know, sub $2 million in revenue, very, very small amount of EBITDA, does not really require a big check. And I guess the definition of big check is always relative. But we value vendor due diligence, and that's really kind of the way to go as a buyer.
So Anthony, we've heard Alex talk about all these third-party consultants that they would use on the buyer's side. Obviously, CPA, a tax advisor, lawyers, HR, environmental, all these various parts, all of which get thrown on you as the seller to have to fend off. This, you know, I think of, like, you know, a jousting, right? You try to knock them off. It's almost like a video game. What outside advisors do you use? You've obviously mentioned Logisyn. We're essentially project managers, but we're not your attorneys. We're not your financial advisors, not your tax advisors, et cetera. Now you, in this particular case, you are an attorney. Did you, despite being an attorney, did you hire an outside law firm?
We did. So we hired the Post-Nally law firm here in Kansas City. And it's a group that we work with as a family. And I would recommend this, you know, even if you are an attorney that, you know, owns a company, I would recommend you have at least somebody on the outside, you know, helping you prepare some of the legal documents. Sometimes when you're emotionally involved in something, you miss things that you shouldn't miss. So, you know, from our perspective as a seller, I think you should have the legal due diligence and somebody to help draft those documents or review those documents. It was a little bit easier for us because I was able to understand what the attorneys were asking from the buyers and what my attorneys were asking of us. So it did make it a little bit easier, but if you have a good group, you know, things will move forward, especially if it's somebody that you work with. We also had an accountant help us figure out, you know, so there's some tax implications on, you know, a sell. So we did have a group of accountants that kind of went through some of the information and helped us, one, prepare some information for the seller so it would make sense, and then two, you know, what those implications could be for, you know, a sell and a tax transaction. So, you know, you should have the experts in the fields that you need to really help you move a deal through to an end. And still today, you know, we'll have, you know, information that needs to be pushed back and forth, and we'll get, you know, people involved that need to be involved.
So let me interject this. In my experience, about 90% of all legal paperwork in an acquisition is industry generic, but about 10%, maybe 12%, whatever, is industry specific. And it's important when you hire your outside advisors, whether that's CPAs, attorneys, whatever, that they have some familiarity with the logistics industry and what makes it different than other industries, because otherwise there are going to be problems in getting everything represented. So, for example, they need to understand how you recognize revenue, revenue recognition rules on a profit share with an international agent. That's not something that comes up, in Caterpillar, in heavy equipment. Those kind of examples. I also mentioned that there's a lot of legal stuff, and what Anthony said is important. Because he's an attorney and because he's also in logistics, he understood what they're saying. Lawyers talk in legalese. Logistics people talk in logisticsese. And somewhere along the line, you got to make sure things don't get lost in the translation. And that's another reason why you want to make sure your advisors have some familiarity with the industry, so they can speak to you in the language that you'll understand, because the purchase agreement is going to be 60 to 100 pages. Almost all of it's legalese, and there's no way your average person is going to read that and understand most of what's in there. A lot of it is representations and warranties, which is your way of contractually, legally obligating yourself to the accuracy of what you have presented during due diligence. Because at due diligence, again, you haven't entered into the agreement yet. You're not legally bound. You can lie through your teeth in due diligence. But in the contract agreement, you have to warrant that what you said was true and be held liable for it if you're not. There's all other moving parts. There's restrictive covenant agreements, employment agreements, exhibits, schedules. There's a lot of stuff involved. The deal looks different the agreement looks different depending upon whether it's an asset deal or a stock deal. There are items like networking capital and escrows and just a lot of moving parts. So you want to make sure that you're very careful in that selection process. So because there are all these moving parts, one of the things that happens is that stuff comes up in that process that you didn't anticipate when you were in the dating phase, when you were in the pre-LOI phase and wrote the LOI. When you wrote the LOI, you probably never talked about or really thought about transfer pricing, which is something that comes up in international transactions where there are international entities, things like that. So let me ask you, Anthony and Alex, let me start with Anthony. Did you encounter speed bumps or something you didn't anticipate before you actually got to the close? Between LOI and the closing, did you encounter, landmines?
I wouldn't say landmines, and I would say, more descriptive of a speed bump. So, the understanding was pretty clear, I think, in the LOI. There were some other things that, because of due diligence and some other documents that came up, that there was a little bit of a blow up. But to Alex's credit and Chris on the Logisyn team, it was a matter of us getting on the phone and talking through the issue and really defining, what we needed to do to move forward. So there will be speed bumps. I imagine you guys can, discuss this or answer it, but my guess would be there's going to be speed bumps, and you just have to be able to pick up the phone sometimes and talk through the issues. That's my view on that. But yeah, a little bit of a speed bump, but nothing we couldn't get through.
Alex, how did you see that?
So I think the important thing to understand, especially from a buyer's perspective, especially buyers that are doing transactions all the time, is that sellers are not doing transactions all the time. And again, a lot of the companies, their baby, they're emotionally tied to it. And some things that you may think are just kind of standard part of the process, like you may have your lawyer submit something. This is specific to the speed bump that Anthony was referring to. It may come off cold and not understanding. It may cause a little bit of an issue, and buyers need to be cognizant of that. And ultimately, the most important thing is keeping the lines of communications open, and getting the business principals on the phone to talk through the issues. Because lawyers or other advisors are going to be very unemotional, very clinical about the process, and not really get the nuance of the emotion tied to the process. And as a buyer, you need to recognize that there is an emotional component on the seller's part, and that something that you may take for granted as being kind of just standard thing that we want to, term that we should negotiate, may not come across the right way to a seller, and you can't get upset about it. You have to just figure out a way to move forward, reassure them that that wasn't the intent, and assure them that, you know, we're all trying to accomplish the same goals and come to a mutually acceptable agreement. Because if the deal doesn't work for everybody, it's not going to be successful.
Yeah, I would say, once again, this goes back to at the LOI stage, deciding whether to go forward with a particular party. A lot of it has to do with trust and respect. And if you build that trust and respect throughout the process, you'll work through these complications. Every deal has complications. There's one last question. We have 1 minute left. I know we have 1 minute left because my cat is telling me it's lunchtime. So let's take that question. It's, should an attorney be involved in negotiating the purchase price? In my opinion, no. I think that your tax advisor should be. If you have an outside advisor, an investment banker, they should be because they own the market. But unless the attorney is really, really keyed into the industry, I don't see where they would help negotiating the purchase price. Any thoughts on that, Alex or Anthony, before we close?
I'm happy to start. I mean, I think if the seller doesn't have an investment banker, you know, assisting them with the process, they should get some advice on the purchase price, especially also the structure and understanding what the LOI actually means and what the purchase price means and how it's going to be structured. They need a specialist that could help them confirm that their understanding is the actual understanding of the buyer. You know, as it relates to the actual act of negotiation, the sellers will typically have an idea of what they're looking for, but sometimes the seller may not want to get in, especially ones that don't have an investment banker advisor, and that's the role of the investment banker, is to lead that negotiation process and act as a buffer between the seller and the buyer, and that you have the investment banker negotiate directly with the buyer. If the seller doesn't have an investment banker to do that for them, and because it's an emotional process, it's probably recommended that they have somebody, whether it be you know, an attorney is a good option, to make those counter offers and keep the emotion out of it in the negotiation process.
Yeah, I would agree with Alex on this. And, you know, my answer was going to be kind of the typical attorney answer. It depends, right? So should an attorney be involved with the purchase price, I think was the question. They could be. It just kind of depends on the scenario. But I agree with Alex that you should have somebody, and preferably an attorney, to review what that purchase price document means. Sorry, not the purchase price, but the purchase document means, and how that it affects, you know, whether it's taxes or, you know, what you are actually selling, so or buying. So again, the answer, I believe, is, you know, it kind of depends. You could have an attorney negotiate a purchase price, but there's a lot of good advisors out there that know, again, the market, like Jan and crew and Alex and what they do. So yeah, it's more of a depends, but, you know, attorneys are definitely helpful, and you'll need them for some part of the process, I'm sure.
Okay, well, on that note, actually saying something nice about attorneys, we'll wrap this up. Since you and I are both attorneys, we'll wrap this up. Thanks everybody for attending. I hope you found it helpful and informative. Thank you, Anthony. Thank you, Alex. Thank you, Will. I really enjoyed doing this. And if you have any other questions, more detailed questions, anything like that, feel free to reach out to any of us and we'll try to get back to you. And maybe we'll do a follow-up webinar with more detailed information, because we could talk for hours about this stuff. Thanks, everybody.
Thank you.
Thanks, guys.